Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 165, published on March 27th, 2026, titled March 2026 Sustainable Stock and ETF Picks. This podcast is presented by Investing for the Soul. Investingforthesoul.com is your go-to site for vital global, ethical, and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. I have a great crop of 18 articles for you in this podcast. Note, some companies are covered more than once. Now, with so many articles to potentially cover, I've chosen 3 to quote from. The other 15 can be found on the web page for this podcast edition, along with their titles and links. In this episode, I'm beginning with an article featuring an investment sector at the core of most ethical and sustainable investors' portfolios: renewable energy. The article's title is The Best 3 Renewable Energy Stocks to Buy and Hold for Decades from Fool.com. It's by Ruben Greg Brewer. Here's some quotes on each of his picks. 1. Brookfield Renewable is 100% clean. Brookfield Renewable has exposure to hydroelectric, solar, wind, battery storage, and nuclear power. The assets are spread across North America, South America, Europe, and Asia. If you are looking for a simple way to participate in the shift toward clean energy, Brookfield Renewable is a good choice. The one wrinkle is that you can buy Brookfield Renewable in 2 different ways. The partnership share class offers a distribution yield of 5.2%, while the corporate share class has a dividend yield of 3.8%. They represent the same business and have the same dividend payment. The difference is that the corporate shares are higher in demand among institutional investors. Small investors should feel comfortable with the partnership. 2. NextEra Energy is a giant in 2 businesses. NextEra Energy operates one of the largest regulated electric utilities in the United States. That is the foundation on which it has built one of the largest solar and wind power businesses in the world. This combination has led to 11% annualized dividend growth over the past decade. Half that rate of dividend growth will be considered good for a utility. Next year's energy dividend yield is 2.7%. which is actually above the utility average of nearly 2.5%. That said, management is calling for dividend growth to slow to a still very healthy 6% in 2027 and 2028. 3. Total Energies mixes the old with the new. Total Energies will be the hardest sell as a clean energy investment because it is an integrated energy giant. That means that it is a vertically integrated oil and natural gas business. If you only want clean energy, you probably won't want to buy Total Energies." End quotes. My second article has some unusual investing options for many investors coming to my podcast. It's titled 11 Best Ethical Companies to Invest In, now, according to Reddit, from InsiderMonkey.com, and is by Noor Ein Rahman. Here are some quotes from the article. "We first sifted through relevant threads on Reddit to compile a list of the best ethical companies and then selected the top 11 that were the most popular among elite hedge funds as of Q3 2025. We sourced the hedge fund data from Insider Monkey's database. The stocks are ranked in ascending order of hedge fund sentiment. All data was recorded on March 17th. Our research has shown that we can outperform the market by imitating the top stock picks of the best hedge funds. So starting with 11, Hershey Company, the chocolate company. Morgan Stanley lifted the price target on the Hershey Company to $247 from $238 on March 16th. Maintaining an overweight rating on the shares. The firm told investors that it believes the market is overly focused on pricing rollback risk and is underestimating the earnings recovery from cocoa normalization beginning in the second half of 2026 and accelerating into 2027. 10. Cognizant Technology Solutions Corporation. On March 16th, Cognizant Technology Solutions Corporation announced the launch of Cognizant AI Factory, which is a multi-tenant, enterprise-grade offering powered by Dell Technologies and NVIDIA AI infrastructure and software platform. Management stated that the Cognizant AI Factory is designed to help organizations scale artificial intelligence more securely, efficiently, and responsibly, and aims at unifying the management of the AI life cycle in a single environment. 9. Kimberly-Clark Corporation. Piper Sandler cut the price target on Kimberly-Clark to $114 from $133 on March 13th and maintained an overweight rating on the shares. The firm told investors that the company's Q1 top-line momentum is tracking in line with what it had expected, with costs hedged roughly 9 months out, securing roughly the balance of 2026. However, Piper also stated that if increased oil costs persist, there could be a risk to the outlook for 2027. Kimberly-Clark sells its products under various brands, including Kleenex, Scott, Cottonelle, Dry Nights, Huggies, and others. 8. Ecolab Inc. March 16th, Ecolab was upgraded to buy from hold by Berenberg, with the firm adjusting the price target on the stock to $326 from $300. Berenberg told investors in a research note that Ecolab will raise prices across all products, services, and geographies by 10 to 14%, adding that it anticipates the price increases to be implemented swiftly and become a sticky component of Ecolab's structural pricing rather than being rolled back. The firm views Ecolab as a net inflation beneficiary. Ecolab offers hygiene, water, and infection prevention solutions and services. 7. FedEx Corporation. On March 10th, JP Morgan lifted the price target on FedEx to $424 from $294, while maintaining a neutral rating on the shares. The firm told investors that it updated the company's model ahead of the earnings report. 6. Accenture plc. TD Cowen cut the price target on Accenture to $275 from $282 on March 16th, maintaining a buy rating on the shares. The firm told investors that it updated its model ahead of the fiscal Q2 results, saying that, considering raised macro uncertainty and no clear end in sight with the Iran conflict, it believes that it is now reasonable that Accenture could just leave its fiscal year 26 growth guide as is. Accenture is a global professional services company that combines technology and leadership in data, cloud, and AI with functional expertise, industry experience, and global delivery capability. 5. Salesforce Inc. March 16th, Salesforce announced the commencement of the prepayment and initial delivery of around 103 million shares under its previously announced $25 billion accelerated share repurchase agreements. The company entered into these agreements on March 11, 2026, with certain financial institutions. Management stated that the transaction marks the largest accelerated share repurchase in history and represents the immediate execution of half of the $15 billion aggregate share repurchase program authorized by Salesforce's board of directors in February 2026. Salesforce designs and develops cloud-based enterprise software for customer relationship management. 4. ServiceNow Inc. ServiceNow was upgraded to outperform from neutral by BNP Paribas on March 16th, with the firm setting a $140 price target. The rating update came the same day ServiceNow announced an expansion of its partnership with Carahsoft Technology Corporation to extend availability to the ServiceNow AI platform across Carahsoft's full reseller ecosystem in the US and Canada. ServiceNow offers an AI platform for business transformation, boosting productivity and maximizing business outcomes. 3. Micron Technology Inc. On March 16th, TD Cowen lifted the price target on Micron Technology to $500 from $450 and maintained a buy rating on the shares. The firm told investors that it updated its model ahead of the company's fiscal Q2 earnings, where a strong beat is expected. TD Cowen also said that while it continues to see upside to the buy-side view even after earnings, the majority of the long-term stock returns could be driven by re-rating. Micron Technology provides innovative memory and storage solutions. And number 2, Eli Lilly and Company. Eli Lilly was downgraded to reduce from hold by HSBC on March 17th, with the firm bringing the price target on the stock down to $850 from $1,070. The firm told investors in a research note that it believes expectations for the total addressable market for obesity are elevated at over $150 billion, and that the market is likely to be in the range of $80 to $120 billion by 2032, with price competition likely to be significant. Eli Lilly develops, manufactures, discovers, and sells pharmaceutical products. And number 1, MasterCard Incorporated. MasterCard announced on March 17th a definitive agreement for the acquisition of BVNK for up to $1.8 billion, including $300 million in contingent payments. BVNK is a leader in stablecoin infrastructure. Management stated that the deal expands the company's end-to-end support of digital assets and value movement across currencies, rails, and regions. MasterCard is a technology company that provides payment solutions for developing and implementing debit, credit, prepaid, commercial, and payment programs via its brands." End quotes. The last article I'm covering presents a highly respected ranking of companies according to a wide range of ethical criteria. The article's title is "Ethisphere Announces the 2026 World's Most Ethical Companies." 2026 Ethics Premium shows honorees outperform peers by 8.2 percentage points, and that from Morningstar.com. The article is from Business Wire. Here are some quotes from the introduction to the article. Ethisphere today announced the 2026 World's Most Ethical Companies, recognizing 138 companies for having best-in-class ethics and compliance programs, corporate governance practices, and cultures of integrity. Alongside the honorary announcements, Ethisphere released the Ethics Premium, a 5-year analysis comparing the stock performance of publicly traded 2026 World's Most Ethical Companies honorees with a broad global benchmark. From January 1, 2021 through December 31st, 2025, this year's publicly traded honorees outperformed the benchmark by 8.2 percentage points. 2026 marks the 20th annual recognition of the world's most ethical companies, which includes companies across 40 industries in 17 countries. This year's honorees are listed at www.worldsmostethicalcompanies.com. 2026 cohort highlights. This year's cohort includes 6 20-time honorees, companies that have earned the designation every year since the recognition began. The 6 20-time honorees are Aflac Inc., Ecolab, International Paper Company, Kao Corporation, Milliken & Company, which is private, and PepsiCo Inc. End quotes. Now don't forget that I have 15 more great articles showcasing sustainable and ESG-oriented companies and ETF picks with their titles and links on the web page for this particular podcast episode. So these are my top news stories with their stock and fund tips for this podcast, March 2026 Sustainable Stock and ETF Picks. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these tumultuous times. Contact me if you have any questions. Thank you for listening. My next podcast will be on April 24th. See you then. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.